discuss the macros further now. Joining us is Sharmila Whelan, the Deputy Chief Economist at the Asianomics Group. Sharmila, morning. First, to begin with, while we're still expecting a formal announcement on the RBI Governor, Arvind Panagariya is expected to be one of the top contenders for the post. Your thoughts on that?
It's still up in the air, but as you say, Arvind Panagariya is the front runner. He's got a very impressive CV, World Bank, ADB, IMF, and he's been with the research policy unit under the Prime Minister. From what we hear, that he is quite a dove, and with him coming in, I think the market is expecting further interest rate cuts, and I would tend to agree with that. We are already penciling in another 50 basis point rate cut for India this year.
Okay, that's quite aggressive. So a 50 basis points rate cut is what you're penciling in. What's the timeline for that, and what is it predicated on?
So we're looking at 2 lots of 25 basis point cut. And that is over the course of the current fiscal year, FY 2017. We would expect the cuts to be more towards third quarter, fourth quarter of this year, the first cut.
Okay, let's talk a little bit about inflation, because this time the print was quite high. We're almost at 6% now on CPI, and that's because of the way food prices have been spiking up. What's your view on food prices in the short to medium term?
As you point out, what's been driving headline inflation up is food prices, and right now in particular vegetable prices. If you look at vegetable prices in June on a quarterly annualized basis, they're up 45%. And that suggests that higher vegetable food prices are going to continue to come through and impact headline CPI, and that's why I'm saying that headline CPI hasn't peaked as yet. And part of it is being driven by the factors that you've mentioned, but also, that we've had 2 sets of 4 monsoons, and there is a gap between monsoons coming in, supplies being replenished, and being supplied into the market and bringing down vegetable prices. But monetary aggregates remain well behaved, which means underlying price pressures are low. That's number one. Number 2 is India is well positioned to step up imports, and 3 is the monsoons are coming through. So I would expect inflation, CPI headline inflation, to peak in the next 2-3 months, and then after that come down quite steadily.
Okay, and your sense on central bankers easing post-Brexit? We have seen Japan act. Can we expect the Fed to stay on hold or hike rates, especially post the recent jobs data?
So our view is that another rate hike out of the US is mostly off the table now. We would not, so another rate hike is off the table, and we would also go further to say that there's a rising probability that you will get more QE out of the US.
Okay, Sharmila, thanks a lot for your time today. So that's the view from Asianomics Group. By the